three kind of food companies I want to talk about: United Food, as well as talk about Boulder Brands. Those are two stocks that are falling today. Let's start with United Food. This is a company that distributes organic and health food items. And one of the things you got to note with the company is that as a distributor, it depends very much who they distribute to. So if you distribute, let's say, to a big supermarket or to a big box retailer, that means your margins are going to be less than if you're able to distribute your food and your products to stores that offer bigger margins. They might be smaller stores. So today, the company coming out and basically cutting its outlook for the rest of the year. Profit did match analyst estimates, but they are looking into the future, as companies often do, and analysts did not like what they saw. So shares of United Natural Foods falling today. And just want to make note there that they did cut their per share earnings outlook for the fiscal year. It ends in July. They're looking for between $2.12 and $2.18. Previously, it was between $2.14 and $2.24. So, you know, when you miss the estimates, that's what happens to your stock. Let me tell you something interesting, though, about a company called Boulder Brands. You may be more familiar with them because of the Smart Balance brand name, right? Well, they've been making a big push into the gluten-free product category. Smart Balance, you know, being that kind of margarine, you know, that's supposed to be healthy for you. Now, one of the things that happens, and we've talked about this many times, is you get reports that are basically put out over the internet. In this particular case, it's coming from a research firm called PresciencePoint.com. And it's run by two individuals, and they make the case in this report that the debt on the balance sheet of the Smart Balance of Boulder Brands is just too heavy for them to really service unless they're going to be able to generate some meaningful cash flow. Now, because the company has put such an emphasis on the gluten-free product category, you then have to step back and say, all right, so who's the competition to Boulder Brands? You've got companies like Heinz, Kellogg's, General Mills. You've got some big name companies that have a lot of money that can go head to head against a competitor that is really only, you know, a small segment of the overall grocery aisle.
I was going to say, would you consider it a niche market? Or
well, there you go. And, you know, it's one of these things, you say a niche market. We know that there has been a big effort to market gluten-free products as being good for you, right? I mean, this is supposed to be for a segment of the population. But then the question becomes, is this a fad? Is this a longer-term trend? We don't really know the answer to it. There's been a lot of consumer research done about it, and this report really knocks the company's ability to generate meaningful amounts of cash, also knocks the company's value, and that sent the shares down. And let me just tell you,
want to talk about Cracker
I just want to mention Cracker Barrel. This is a company that was able to maintain their menu prices in the face of increasing food inflation.
How did they do it?
Pretty well. Take a look at the stock. The stock is up big time today. And I want to also mention that Scott Rothbard of Lakeview Asset Management, he's been on Taking Stock repeatedly. He loves the Cracker Barrel story. He was very bullish on the stock. And you see the shares today up substantially on the news that they've been able to hold prices and they're going to exceed their previous guidance for earnings per share.
That year chart showing a rise 34.25%. That's pretty impressive.